Benchmark indices extend gains. Nifty steady above the 21,600 mark, while Sensex trades above 72,800.
Nifty Realty shines in trade, gains 5%, most since 2021.
Well, a slew of updates. Bajaj Finance, Ujjivan Small, Angel Broking surge on better than guided Q3 updates.
Nifty IT slips from morning highs to trade in the red on Morgan Stanley re-rating. LTI Mindtree, HCL Tech and TCS extend losses.
And Interglobe Aviation has withdrawn fuel fee on recent fall in jet fuel prices. So, will other airlines also follow suit? We'll find out. Hello and welcome. You're watching Market IQ on NDTV Profit. Quick look at markets first. You're seeing, markets showing some amount of strength, resilience, 2/3% higher on the Nifty 50 as we speak. Also, with regard to the mid-cap as well as the small-cap indices, they continue to outperform the benchmark index. In terms of the gainers on the Nifty today, we're seeing the likes of an NTPC up 4%. All-time high for that stock. You have the likes of Bajaj Finance surging on the back of numbers. You also have Tata Consumer hitting its all-time high, 3.5% higher on Tata Consumers. Among the losers, you have the likes of an LTI Mindtree as well as HCL Tech. IT continues to be the laggard there, and BPCL also trading with a cut of around 1.4% odd. Let's quickly look at the sectors as well. You're looking at the Nifty Bank, which is up 1% as well, largely in line with the broader markets. You're seeing, some amount of red on the Nifty IT, just a hint of red, in fact, as we speak. But other than that, you're looking at the likes of a Nifty Realty, which is surging 6% in trade. Nifty Private Bank also gaining a percent or thereabouts. Let's also pull up the constituents of the Nifty Realty because all of them have really hit it out of the park today. You're seeing pretty much a solid piece of green across the board, 4% plus gains across the board on the Nifty Realty. We will speak about that because we have a guest in store. We have Bowman Rustam Irani, who's the CMD of Keystone Realtors. Of course, Rustamji, to talk to us about what's happening, what are the trends that's really shaping up in the real estate space. Quickly to try and break that down. Smriti.
Right. Before we move on to Realty, and we'll discuss that further, I'd like to talk about energy sector. Now, energy is also seeing a bit of a uptick today with NTPC, as you mentioned, up 4%, and the index is also up more than a percent. One of them is Torrent Power, that is in focus. The company has signed 4 MOUs with the government of Gujarat. We have Hemant standing by to bring us more details on that. Hemant, tell us a little bit about this MOU. What kind of what's the quantum of spends that they're kind of looking for within the state of Gujarat?
Thanks, Smriti. So Torrent Power has signed 4 MOUs with the government of Gujarat ahead of the summit that's coming ahead. And this is for an aggregate total of about 47,500 crores. And it's across, the investment plan encompasses your investment in renewable energy, green hydrogen, and power distribution. If one were to break down the 47,500 crore rupees, it would go towards 3,450 megawatts of solar power projects, 1,000 odd megawatts of hybrid power projects, and then associated infrastructure and capex for about 7,000 megawatts of solar projects. The company has an installed generation capacity of about 4,300 megawatts, and its capacity under development is about 1,000 megawatts odd. So this is 3 times that size, which is significant, and you're seeing the stock, gain about 13 odd percent, and it's also up on volumes about 16 times their 30-day averages. Now, what are the 2 key tailwinds ahead for this company? Firstly, increased contribution from the license distribution business, and secondly, the higher contribution from the renewable business that they're largely expanding on.
Right. Thanks so much for that update. Torrent Power flying away in trade, 9% higher on the back of that piece of news. But we are now joined by Bowman Rustam Irani, who's the CMD at Keystone Realtors and the president of Credai to try and break down as to what exactly is happening in the real estate space. It's a buzz today. Good afternoon, sir. I am Hersh. Sayta. With me is Smriti, and we'll try and break this down for our viewers better. So, sir, talk to us about what are the trends that are playing out in the real estate space, because this space is absolutely a buzz. Despite the fact that rates have gone up, we are at a peak in terms of rates, real estate is a key rate sensitive, right? So despite that, we've seen very strong both on the commercial as well as residential demand coming in across the country. It's secular.
Thank you, Hersh. Thank you, Smriti. First of all, Happy New Year, and may 2024 continue to be in the same stream that 2023 was, especially for real estate.
Sure.
Especially for real estate, we've had a very good run in 2023. We believe that the consumer has realized that the prices that have, not significantly gone up means that the developers are holding the prices as of right now. The only price being passed on to the consumer is more to do with the inflationary pressure and the, materials cost and services costs that have gone up. We are aware that the compliances have also kind of improved and increased. And all these, while they're extremely good for the consumer, at the same point of time, there's a cost increase also on their account. But what is driving the real estate business? I can tell you, it is nothing to do with only real estate. It's got to do with the feel-good factor that is there across industries. Like you just mentioned, earlier in your report about Torrent Pharma, I'm so happy to hear about their MOU signing, which is again going to need, let's say, more people to come on the ground and set up base, maybe more commercial spaces. There is a growth overall, whether it is cities or even tier 1, tier 2 towns. Credai had a report drawn up with Lazarus Forest in which we predicted the 9 new towns that are going to be the places where investment will see a huge growth. Indore and Kochi feature in them. So as of right now, India is itself abuzz and on fire. And I think real estate happens to touch every stream of your life. And towards that, our developer fraternity, which has become a lot more organized than it was at least 10 years back, is reaping the benefits on the back of a strong demand that has grown. And another thing, which I'd like to mention for everybody is that about 1.5 crores is considered as a luxury homes or premium homes across the country. But one should be a little comfortable in knowing that 1.5 crores in a Mumbai or even a Delhi or a Bangalore or Chennai does not make it a premium housing. But the sale of this segment is extremely huge. And as far as the premium, what we consider premium 10 crore plus homes have also seen a huge increase. And I can talk about MMR alone. We've seen about 1,27,985, so about 1,28,000 registrations take place, in which I can tell you that the affordable housing and the mid-mass, which is I would say 1 to 3 crore homes, have seen the largest part of the pie. But what has happened with that is because of the premium houses having a higher ticket value, they continue to steal the limelight.
Right. Good afternoon, Mr. Irani. Smriti this side. And as you talked about the premium segment, I'd like to understand a couple of things within this segment. Now, as you mentioned, the demand has been on a high, but so has supply. And there seems to be an increase in unsold inventory as well. So what kind of trajectory do you see going forward? Do you see kind of moderating a little bit? How do you see this playing out?
So, Smriti, first of all, when markets improve, you have everybody chipping in, everybody stepping in, everybody wanting to kind of have a piece of that pie. My assumption is when you say supply has increased, it is more important to say good supply should increase, right? Because the customer has become extremely discerning as of right now. So in spite of all the stock that you will see coming in the market, I don't think all of it is going to be something that my consumer is going to love. Consumer has become extremely selective with what exactly he wants to buy. And I can tell you in the premium segment, people are preferring gated communities where there is a lot more safety, security, community developments where there is a lot more of connectivity with your fraternity or with the people living in your complex. Then of course people are seeing the amenities, people are seeing the reputation of the developer, people are seeing what kind of long-term good titles are available. At the same point of time, locational advantage with regards to the infrastructure that is coming up in the area. And again, over here, we are blessed in the MMR that about 3 lakh crores has been expended or is being expended by the government of Maharashtra for improvisation of the infrastructure out here. But I should say, quite clearly that the government, as of right now, is driving the economy in a large way by spending heavily on infrastructure, whether it be the Delhi-Mumbai highway, whether it be the bullet train itself, whether it be the ports that are coming up. All these points are going to become infrastructure. All these points are going to become huge places where a lot of development will take place. And these developments will not only be residential, they'll be commercial, there'll be warehouses, there'll be data centers, there'll be senior living, which is again becoming a very big play. There will also be student housing or hostels that get created outside of campuses, because we're seeing a lot more people prefer that. So while we at CREDAI are continuing to carry out studies so that our members tend to benefit from that development, I can just tell you in a nutshell that given the pace that we are seeing of the change, we are very hopeful that 24 will outgun 2023, and we will have a steady supply of good inventory coming up in the market, which, your point about even the unsold inventory, it is probably the lowest in 15 years as of right now.
Right. To try and understand or break this down a little bit better, you spoke about the MMR region, you spoke about infrastructure development. What are the kind of shifts in pricing that you are expecting on the back of that? Because you have a city like Bombay where you have a whole hog of infrastructure development happening, including the sea link being extended, etc. And once all of those infrastructure starts to come on par, does that really mean that some of the suburbs will see better demand trends? And because because Rustomji has such a large presence in Bombay, maybe you're the best person to ask this question to. So will you see a shift in pricing trends, especially in certain geographies?
I don't like prices just rising abnormally, and I'm glad that our developer fraternity has kept that in check, because when this happens, it usually works out like a blip. And then things come back to a descent, and it's not very, very good for the developers. But I can tell you this, au contraire, your belief that the suburbs will benefit, I think with the coming of the and pardon me, city folk, I think the SOBO is actually going to benefit a lot more because if you see the shift of development of residential that took place while Lower Parel became a husband for commercial activity, a lot of people started living more towards Bandra and those locations where they found a lot more community developments going on. There weren't any good developments coming up in the city, but now with the infrastructure growth and with the connectivity to of the Worli ceiling getting extended all the way to the city, I think what will happen actually is that the hubs which are in town, which were not being developed for a long period of time, are seeing a spurt of development. And I think this will benefit those parts of the city a lot more. But yes, you're right. With the coming of infrastructure, what we saw when the Andheri-Ghatkopar metro rail had started, it wasn't that Ghatkopar suddenly took the prices up. It was that both areas, Andheri and Ghatkopar, became a much more stable market to be in and a preferred market to be in. And that is why buying velocity that happened at both the ends and everything that was along the way actually improved. I think this city has got tremendous potential. Mumbai is blessed with a coastline like no other city. We should explore every avenue. We've got a 150-year history. We've got some of the best infrastructure, whether it be electricity, water, whether it just be the roads. Even today, I would say that, after traveling the rest of the country, of course, as of right now, because the infrastructure work going on, there is a little bit of a traffic jam. But think of it 3 years hence, when all these bridges are completed, when all these metro rails are completed, you're going to have a fantastic time in the city. Something like the MTHL will just take off so much pressure from the Mankud area or the Chembur area for people who are traveling towards Pune. So all these things make me extremely hopeful about the entire development of the city. And we at Rustomji are definitely, taking all the right steps to make sure that we are present in those where infrastructure spend is taking place, where infrastructure dividends will be seen in time to come, and making our presence felt in those areas. And towards that, we are also moving into the SOBO area.
Right. You're talking so much about demand. Let's talk about the ancillary sectors that may also see an uptick because of this. So maybe pipes, paints, and cement sector. How do you see that this side of real estate, the ancillary sectors, kind of playing out in the next couple of quarters?
I can say this to you quite clearly that cement and steel have been rocking it because of the fact that infrastructure spend is so high, and every of those projects definitely require steel and cement both, right? With regards to the other ancillaries, whether it is sanitary ware or whether it is electrical fittings or whether it is just doors, windows, glass, every one of those industries are benefiting. And I mean, you can see some of the new listed entities that have come into the market as of right now. They're all skyrocketing on the back of this. Not only that, I think green energy has started to play a very important role in all our developments. Sustainable development has become the buzzword and has become the mandate, and we are very happy for it with the government as well. And this also means that a lot of new technologies are coming into play, and all of these companies are doing extremely well. I can tell you we spend about 20% of our time personally in this office, other than my entire team, to look at what is the next best we can do to make our homes more green, more sustainable. And when I say sustainable, people should get this right. Buying the sustainable home might be a little more costly today, but over the long run, it will lead to a huge benefit, because your OPEX cost will come down tremendously, and over time it will well worth pay for itself. More than that, just having the pride of living in a carbon neutral home, which is again a CREDI initiative that we plan to achieve by 2050, and towards that 1 lakh homes have gotten signed or are in the process of getting signed across various parts of the country. We are also, I think I'll be prematurely announcing it, but we're taking a lot more measures which will be announced on the 7th in Varanasi, where we have a major conference, where we are talking about all of these things as to how our industry is going to become A, carbon neutral, and B, as a matter of fact, add to the flora fauna of our country. Overall, again, I can say that all these industries that are in the new tech businesses, whether it's security, whether it's car parking systems, whether it is electrical fittings that are power saving, whether it is sanitary fitments that kind of save us water, all of these are going to just fly off. And if I were an investor, an intelligent investor, I'd be investing in all of these.
Right. And so, I'd like to cover a couple of bases, which have been left out. One is on the commercial real estate side. We've seen a large pickup in commercial real estate as well. Of course, residential has been doing quite well over the last couple of years, but commercial has seen a bit of a pickup across geographies. So could you tell us what's happening on that count? Why do you see such a large pickup? And second is both commercial and residential. Is the entire real estate space a secular trend now? Is it a multi-year kind of an upcycle? And will balance sheets of specific players as well as the industry as a whole look very different at the end of the next 3 to 4 years?
You're asking me to take a crystal ball and tell you everything about real estate. That's going to be difficult for anyone to do, let alone me. But I'll try and touch upon your first point. Commercial real estate has become a very important mainstay for most of the larger developers. It isn't like there was not a demand for commercial real estate. There always was. But there weren't the size of developments that we are seeing nowadays taking place, right? And when you look at how commercial real estate used to get funded earlier, it used to come out of only debt. And a developer today, with a lot of developers having the advantage of reaching out to REITs and being able to kind of plan, at least the long term as to the outcome of what their project is going to be, it looks much easier and rosier. And we've had this request with the various agencies over time that there should be somehow a fractionalization of real estate. The day that happens, Hersh and Smriti, I can tell you very clearly, when that becomes mainstay, when that comes to, when every developer is able to kind of reach out and fractionalize his real estate, you will see a further growth, because real estate has been at the core of every Indian's investment portfolio. As a matter of fact, historically, 60% of Indian wealth is created out of real estate. And this alone makes it one of the best. And, they say it's the only real investment. Everything else is just, in a way, a paper or a graph. But I think I would encourage investors to look at the changing trends and be able to invest differently, if not directly into real estate, as to buy the entire thing. go into the fractionalization real estate and pick up stake out there, invest in REITs. At the same point of time, I'm very happy to see the kind of developments that are taking place on the commercial front, because it is commercial development that actually drives real estate and not the other way around. And with the number of companies that are looking at setting up base in India, again, this is geopolitical factors worldwide, it is leading to a huge demand. And we are seeing certain states are taking a march over the rest. And this only speaks very highly of the administration of those states and the way they are going about gunning for business and actually taking business away. So it's actually become like how do I say, the state heads have started becoming business heads by themselves and are looking at the long-term benefit of their state and are offering stops for people to come and set up base out here. Maharashtra again is blessed. Gujarat is seeing a lot of activity. UP is seeing a whole host of new developments. I can tell you recently what I saw for Tamil Nadu is also great. Telangana has been a state that has been extremely strong and has been doing a lot of good work. Surprisingly, not surprisingly, quite this. When I went to West Bengal, I saw the kind of developments out there, and I was pretty pleased of seeing a government that is absolutely interested in making sure that they continue to be a part or a relevant part in the minds of the business people by the kind of schemes that they had floated, and making real estate a reality for them.
Right. Thank you so much, Mr. Rani, for being so comprehensive with us and sharing all your insights with us. It was a pleasure having you on the show.
Once again, all the best to all your viewers. Thank you very, very much.
Thank you. Now, let's take a break for now, but do stay tuned. We'll tell you about the only Nifty 50 constituent to gain over 100% in 2023. But all of this after the break.
Welcome back. You're watching Market IQ on NDTV Profit. As promised, the only constituent of the Nifty 50 to double in 2023, and it's Tata Motors. A growing share in the electric vehicle space, strong product portfolio, and the top pick for brokerages across the board. By now, of course, we've spoken about it. Tata Motors is that name, and it's had a stellar year in 2023. So, to tell us more about all that's happening in Tata Motors and what we can expect also going forward, Himansh is joining us with all of those details.
Thanks, Hersh. So Tata Motors, like you mentioned, the sole Nifty 50 entity to return over 100% returns in 2023. Now, the stock is currently trading near its life high levels. And if you take a look back, I mean, the stock has delivered multifold returns in several years. It's while it was up 2 times in 2023, it was up 2.6 times in 2021, 5 times returns in calendar year 2009, and 2003 it was up 2.3 times. Now, what's been working for Tata Motors is really its PV portfolio, the passenger vehicle portfolio, which continues to report record sales. Now, it's also capitalizing on the SUV trend, where in FY23, you saw 66% of its sales coming in just from the SUV segment. The EV, which is a game changer for this company, and Tata Motors continue to hold its market leadership. While it has been eroding over time, given the competitive intensity in this space, it still maintains leadership with very robust models. Second is a consecutive year of surpassing 500,000 in passenger vehicle sales. And lastly, it's on track to become a zero debt company. And its debt servicing plans are auguring really well, and credit rating agencies have also attested to that. If we take a look at the multi-baggers PV portfolio, you see the likes of Altroz, Tigor, Tiago, Nexon, Punch and Harrier, whereas its EV portfolio comprises the likes of Nexon EV, Tigor EV, Tiago EV and so on. The upcoming models in the EV portfolio this year are the likes of Harrier EV and the Curve EV. Now, the notable one is the Curve launch, which is going to be built from the ground up, keeping the EV model in mind, whereas the previous models were all retrofitted to ICE models to present a EV model here, but Curve EV is something definitely to watch out for. Then you have EV contribution in terms of volumes. You're seeing incremental additions of the EV to the Tata Motors overall portfolio, whereas in FY21, EV comprised of only 2% of its portfolio. In FY24, as of FY23, in fact, it's about 30-odd%. So which is very significant. In terms of volumes, you're seeing volumes jump up nearly 10 times from 4,000 levels to about 32,000. So about an 8 to 10 times jump that you're anticipating this year. In terms of recent issuer ratings on the back of its debt servicing plans, you see on November 9, Moody's upgraded the ratings for this company to BA3, and the outlook continues to remain positive, whereas S&P upgraded the rating to BB+, which is positive. So lots to watch out for in terms of its debt servicing plans as well as its EV launches coming up. And Tata Motors, like you mentioned, continues to remain a preferred pick amongst the pack.
Right. Thank you so much, Himansh, for that. That's all that we have on Market IQ today. But lots more coming up on NDTV Profit. Stay tuned.
Hi, welcome. This is NDTV Profit and I'm Alex Matthew. You're watching the Mutual Fund Show. This is where we get you actionable insight to help you make the right financial decisions. Now, we've spoken about passive investing often on this program, but today we're talking about passive investing with a twist. And the focus is going to be on a particular strategy that has beaten the benchmark quite comfortably over the course of last year and indeed several times over the course of the last 3 years. Now, this is only one strategy, remember, so first we're going to focus on what this twist in passive investing is all about. And to tell you about that, I'm joined by Chintan Haria, Principal Investment Strategy at ICICI Prudential AMC. Chintan, thanks as always for taking the time and for speaking to us on NDTV Profit.
Hi Alex, it's a pleasure to speak to NDTV Profit and in its new avatar, and wishing all the viewers a very happy 2024.
Wish you and your team and your family a very, very happy 2024. Now, let me start by asking you what factor-based investing, because that essentially is what this is all about. Of course, it's been called various things, but ultimately it takes that plain vanilla passive strategy approach and it twists it a little bit. So how would you describe it?
Yes, so essentially investors are well aware of active funds where the fund managers are choosing stocks on the basis of certain strategies. Someone may be value, someone may be growth, someone has a quality tilt. And in the last 5-6 years, the passive funds, as you mentioned, have also grown. Traditionally, passive funds were on the basis of market capitalization. So you had large cap passive funds, mid cap passive funds, small cap passive funds. Now, in between the market capitalization based passive funds and the active funds, globally as well as in India, we've seen